Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your agriculture update for this particular Wednesday, and this is the 14th of June 2017, and the time right now getting on to 4:10 p.m. Central Daylight Time. I'm late, but you do understand we had the FOMC meeting, then the press conference. By the time I got myself going, just later in the day. A mixed bag in the energies, a little bit of reaction down in the wheat market, but remember, if you're watching the Minneapolis wheat, that has been the firestorm because quality of wheat is terrible, and the contracts there, they've set record volume. I think it was yesterday. So be ready, because these markets on pullbacks in the wheat still could be very, very well supported, even though you're down a little. Corn's a different situation. The heat's moved away. Now you've got rain coming in, so maybe the corn market starts to look tired. It had a reversal day today that is not pretty on the charts. And in the bean market, you went nowhere. Finished the day unchanged with the meal pretty much the way it is. One other point. You see these little clocks that are next to my symbols up there? It means tomorrow is the last trading day in those particular indices. So they're going to move to the Septembers, and you're getting that in a lot of markets. Notice I've moved in the energies to the August, and I've already moved you around on the grains, because why are you trading Julys any longer? Or Junes in some of the financials. As you take a look at the soybean weekly chart, you've still got the same range, 980.5, 909.5. For the week, you're down 9 3/4 cents. Now, as we look at the current down thrust, we had a bounce. This rally high did not take out anything of importance here. Now we've gone basically sideways, and you start another down thrust if you can take out, not today, not there, but right here, the 936 level. That would give you just enough of that bounce, and that would set the market. If the market can close down there, that would do the chart. And that's because it's a daily area chart of just closing prices. When we take a look at the chart itself, remember we had this outside day down. You had a bounce yesterday, and now you're continuing. So if you were to take out that high, it's no longer a bull trap. That's the important thing. It could be a market that just reverts up. But when we go to the swing lines, we see we have a pattern here of lower highs. We have lower lows. That is bearish. What's held the market together is it's over the 18-day average of closes at 936.5. And that sort of ties in now with the area chart of closes I just showed you, where you have to be under 936. That would put it under the 18-day average. That would qualify as resumption of the bear trend the way that I chart. So got to wait and see if that occurs. In terms of Bollinger Bands, which are these black lines, what are Bollinger Bands? Think of them as resistance and support numbers developed via an algorithm that is designed to keep the market trading within them 95% of the time. You can hit them all you want. It's closing within them 95% of the time. Can you step out of them? You did it 4 days in a row there. I count each one of the days where it's outside of it as a rule of thumb is one of those 5 percentage points. So if it's 5%, 95% within it, and you close outside of it, you got a 4% chance the day after it does it. 3, 2, 1. Got it? And that doesn't mean it has to rally like it did here. It just means it's going to get to the right-hand side. Too many people, and I talk to them on the phone, they'll say, I'm going long there. It's going back. When you buy a Bollinger Band, which is not what I teach in any manner, what happens to you is, where's your stop order? I wouldn't even begin to know what you do with it. I don't know why people do that. It's not how the signal as I teach it is meant to be used. In the November soybean slow stochastic, momentum is still drifting to the upside. What you want to see is that red line hang down, start down. That'll tell you then that momentum is in sync with price. Right now you've got a bit of a divergence. You have the market sinking back towards the 18-day average, but momentum staying up. When we come to the August meal, today was an important day. You still have the pattern of higher lows, and because originally you had higher highs, it stays. But All you need to do is get under 302.80 and this whole pattern changes. It then becomes one of lower highs, lower lows, under the 18-day average, putting back into play the potential of getting down to the lower Bollinger Band of 298.10. If you were to hit 302.80 and get a reversal, you would be wrong if you got back over that recent high. And that could not throw out a buy signal. You'd then end up with a lower low and then a higher high. So the only play on the board could be that the market, either the bulls hold it together here and keep this pattern going and take out this 308.20 right away without taking out 302.80, or the bears take over if you hit 302.70. In the soybean oil market, the pattern is bullish still. You have a pattern of higher lows, higher highs. Remember, that's got the clear pattern of higher highs. Momentum still pointing up. So what the bulls likely will do, I can only say likely, I don't know, is 31.98, the 18-day average, will become their support. If the market gets under 31.92, I think they cave in and join the bear camp. Why? Well, unless you got back over 32.58, you could end up with lower highs, lower lows under the 18-day average. And if momentum starts down, possibly you got that lower Bollinger Band target. In the corn market, huge reversal to the downside. A big range day, too, 403.25 to 395. Momentum has not been pointing up. You've actually had divergence. As the market's been climbing, momentum's been pointing down. Now momentum's still pointing down and suddenly prices joined in. What the bears don't want to happen is taking out today's highs. However, there's no reason yet to be bearish. You still have the pattern of higher lows and higher highs. This outside day could be very important if you take out 391.25, but even then put you right into approximately that 18-day average of closes. Let's just check the price. It was 394.25. So that is the number that the market can't afford to get under. I said 91. When I looked at it, I said, gee, the 18-day average is under that. Where is it? 94.25. Take out 94.25. You'll be under the 18-day average. Market will be looking down. I think the market goes into a potential downtrend. Obviously, the 100-day average will be the first level of support. How much, I don't know, but that would be it. And if that gives way, then 382.5 becomes a potential number. In the wheat market, I wish I could say I'm surprised. Here's the wheat coming into today. Market's up to the 100-day average. That's your first resistance area. Just like in corn, the first support area we talked about. If it gets through it, I'm looking for the upper Bollinger Band to be the next resistance area. The market's in an uptrend. I think the pros are already taking profit against the 100-day average, and I think they'll take the rest of it at 62.5, and it's pretty much what's going on. Now, if they're doing anything, I think they're a buyer in the 450 level, which stops under 445.5. Momentum is not turned down. It's flat, but that's still bullish. In the sugar market, you have the embedded reading. That occurs when the market converts itself from being oversold, where the K and the D lines are both under 30, to where they both go under 20 and start going sideways. When that occurs, it's the most bearish of the elements I know of on a technical indicator. And it spells trouble, meaning that rallies in the market are generally going to get hit by sellers, and that's what's happening. Could the market reach down for the lower Bollinger Band? Well, it's certainly a live target. In the coffee, embedded readings. Lower highs now, lower lows, back into the bear camp. Cocoa market, I still say the market's trying to get back to this 18-day average, but so what? You're too overbought to be a buyer. You've got a higher high, and believe it or not, this low is under that one, which was 1971. You have no real trend here, nothing to do there. And a market that is caving in is the cotton market. Look at down another 87 points. This is a market that was way up here in the 76 level. It's now given everything up as it was dragged higher when the July cotton was taken off to the upside a couple of weeks back in a dramatic fashion, and that has given up all its price premium. So are we getting ahead of ourselves on the downside? I want to go on record. Absolutely. You're now 2 days in a row under the lower Bollinger Band. You're not embedded. I think the market's getting overdone. That is not a reason to be a buyer. It's just I think it's getting overdone. Cattle market, down the permissible limit today. And I'm looking for support right here at the lower Bollinger Band. That was today's lows. Doesn't mean you can't go lower, but that's where I think the pros are going to take money off. They might have held off today because it couldn't go any lower, but I wouldn't be surprised to see them grab some money tomorrow. Same goes in the feeder cattle as you're pushing the lower and low and oversold there, so these markets have come apart. The hog market joining the party, lower highs, lower lows, bearish momentum, battleground, the 18-day average, it's been hit 3 days in a row, but until you take out 81.62.5, the bears are in control. Potential, maybe the lower Bollinger Band of 7,900. So you put it all together, and it's interesting. And I'll be talking a lot in the morning about all this. Now, I normally do my market research report at 8:30 in the morning. I'm not doing it tomorrow at 8:30. It'll be later, all because I have an appointment out of the office that I have to make, and I can't do it. So what do I do? Let me explain what I do with my research to help you all out. I come into the office early, very early, and typically at 8:30 I start recording 40 charts at a time for a video. I throw out all kinds of ideas, buy here, sell there, day trade, position trade, longer term ideas. I tell you where I'd be right, where I'd be wrong in my thinking. Then I write about it in the evening. I'm going to go after this and do a report right afterwards and get it out before 7 tonight. And in addition, midday around 11:30. Then I write other reports. Now, I have not written a gold report, a long-term gold report, in other words, looking at the monthly charts in a month. Well, I want to say probably since December, so 7 months or so. I'm almost through. I should have it done first thing tomorrow. How do you get access to my research? That gold report, which I think you're going to want to see because I really hone in on the longer-term picture. Well, it's simple. You give us a call at 866-973-2077. Tell my staff you'd like a trial. If you've had one before, you're not going to get it again. You can become a subscriber to my research, but I only give it once. So that's your free shot at it. If you haven't had it, what do you have to lose by getting it? You can also click up here. If you're watching us on YouTube, and it'll be an icon, just click it. You can go to our website at www.irapstein.com, or underneath us on many websites, it'll say click here for IRA's offers, click the 20-day access to my research, and away you go. Remember the gold report, I think you're going to want to see it. I dealt with monthly charts, MACD, longer-term moving averages, uptrend and downtrend lines on it, and I talk about everything, including today's Fed announcement. I'm Ira Epstein. You have a good day.